All right, candle orange theory trader back with a deep study on candle three price action. Okay, sweeps equal highs and equal lows. So let's get into it. So we're going to cover the only indicator that we will need, how to form a bias for candle three, sweeps equal highs equal lows, candle three behavior, how to enter and exit a trade, and live chart examples. So the indicator that we need is market levels indicator. The most important part is just making sure the equal lows and highs are checked. Max can be 10. You can change the colors if you want to and the style. That's up to you. But just be sure they're checked and make it a color that you can see. Along with the sweeps, just make it a style color that you could see, as well as the number here. That'll determine how thick that the lines are. The rest of these will be up to you in terms of if you want to see the open price of the day, the high of the day, or lower of the day. These are my settings. I don't care about the monthly levels. Not really. I don't really am concerned with the day. This is the most important thing to me. I want to know the daily open price and the current high day and low of the day. That's really the main thing that I want to see. So again, color and thickness is up to you. So how to form a bias for candle three. This is the candle range theory in a nutshell. Um, you have candle one, which is the range, candle two, which raises the high of candle one and closes inside of it. And then we trade only one candle, which is candle three. So we're only focusing on finding this one candle, regardless of if this is a daily time frame, 4 hour, 8 hour, monthly, weekly, it doesn't matter. So what I like to do is this candle two, I like for it to form either the high of the day on the 4 hour, 8 hour. If I'm trading the daily, I like for this candle to form the high of the week or low of the week if I'm long. Okay. But after one candles one and two appear, okay, then I'm looking to trade candle three. So the only thing I'm trading is this candle right here, and that's all. Okay. So in terms of the point of interest, again, low of the day or low of the week, high of the day or high of the week for candle two. And I trade off of that. Doesn't mean it's always going to work out, but this is what I want to see. So what are we looking for mark levels to show us? The indicator. It's going to show us sweeps equal highs equal lows when long and short. Okay, so what is that? Some people call it a liquidity sweep. Some people call it a stop hunt. It's just a temporary price move that's going to push price beyond a recent higher low, triggered stops of some traders, and then continue. So in an uptrend, we like for sweeps to go to the bottom, and for a downtrend, we like for them to sweep to the top. Okay, then reverses lower or goes higher. You can pause to read a lot of this, but mainly the importance of sweeps are that it shows us reversals and trend changes. It shows us how strong the trend may be, and sweeps can reveal where the pressure is building. So it helps us avoid fake outs and gives us high probability entries. All right. So again, if you want to pause to read that, you can. So here are some sweeps. So the sweeps are just the blue lines on this chart. So right here is a sweep to the low. Right here is another one. Right here, and right here where these green arrows are. Okay, but the lines are going to be blue. Okay, that's my setting. You change it to whatever color you see fit. As long as this level holds, then the trend is valid. That's what we like to see when we're long. Okay. So what are equal highs and lows? I mean, very self-explanatory. There's just price levels where the market forms two or more swing highs or lows at approximately the same price. And it just gives us a flat horizontal line. It shows us for support or resistance throughout the candle's movement for the day. And all of these charts are 5 minute that I show unless I specify otherwise. The lower time frame is going to be 5 minute. But if you want to do 15 minute, that's up to you. Or 30 minute, I don't care. So equal highs and lows is going to show us how to notify or pinpoint turning points, continuations, and the trend health. Okay. So when price sweeps equal highs or lows and then reverses, that's a bearish signal, and then opposite for bullish reversal signals as well. So equal highs and lows can help anticipate fake outs or breakouts or show us stop hunts. And they're also good for take profits, which I'll show you in a second. Okay. So that's a great way to use equal highs and lows. So the equal highs and lows, I have it set up whereby there will be a dashed line. So you have equal lows here, here, and here, smaller level here, and another one right there. All right. So when we put it all together, we have sweeps, which is the solid blue line, and the dashed lines are equal lows. So when we're looking at a candle three, which is bullish, step one is to see the low of the day. And then steps two and three are to see equal lows and sweeps to the downside, sweeps to the downside, and then price continuing upward. As long as we see those three things working together, chances are you got a pretty good candle three to the upside and opposite for the downside. So candle three, how should it behave when you're long? Okay, actually, I just showed you an example, but again, the equal lows, they should hold. You should see the sweeps to the low of the candles, equal highs. Like again, they're not located here, but like say this and say like Like these equal highs right here, they should have got taken out. These relative equal highs right here got taken out. These relative equal highs right here got taken out. So things like that. All the highs that were established throughout the day, they should get utterly destroyed. Okay, but the lows stay. Low of the day is going to be the strongest support level there is. So we're getting, remember, for a legit candle 3 to the upside, you got the low of the day and then equal lows and sweeps to the lows panning out. In terms of when you're short or bearish, it's just everything in reverse. The equal highs hold. The sweeps to the high of candles, equal lows get taken out. The high of the day is the strongest resistance point there is. So you got the high of the day, equal highs, and sweeps to the highs. So again, this is putting it all together. This is showing, though, a daily candle range theory and then candle 3 on the lower time frame. So this is candle 1, candle 2, the red one, candle 3, which is this on the 5 minute. So this big green candle is this on the 5 minute. So again, remember, we have sweeps on this chart. The sweeps are black. I didn't make them blue, but same principle. A sweep that stood, equal lows, another sweep, smaller sweep, equal lows, equal lows, equal lows, equal lows, equal lows. Okay, all that. Okay, and they stand. All right, so all this wiggling around, you don't care about that because all you're looking for is this support to hold. So now that we have all this information, how do we structure our entries and exits? All of your entries can be based on equal lows and a sweep in your direction. Either one of those. If you see either one of those two things and price is close enough to it, take it. Do not overthink your entries. But if the zone gets taken out, then you want to take the stop loss or get out early. Okay, you have the option. I give the stop loss enough room to breathe. So I don't set it like right at, let me show you here. I don't set it like right at this equal low. No, I would give it enough room to possibly give a wick in there here and now and then. Okay, so that's that. So as well, it is possible to be early. So don't abandon your bias unless the low of the day or high of the day gets taken out. Okay, so keep it simple. Your analysis should take like 30 seconds. You have your bias, which is the higher time frame, your analysis on the lower time frame, and then as soon as price gets to a zone of interest, take the trade. You've done all that you can do. So here's an example of that. So here is a possible candle 3 that we're looking into. So price is below the daily open, and it's approaching these equal lows right here, right? This dashed line. So price is in that general area. This right here does not have to be pretty. All I'm counting on, okay, once price gets to my zone of interest, then I'm going to go ahead and get in. As long as these equal lows hold, I'm not going to exit the trade. Here's the result, right? So this trade was a winner with more equal lows holding and more sweeps to the downside. Sweep right here, here, and then steady equal lows. Okay, nice trend upward. That's it. That's all I'm looking for. If it's not doing something like this or something very similar, you might not have a candle 3. Here's a short example whereby this is an entry off a sweep of a blue line. Okay, so this sweep right here happened right when this green candle opened, went up, swept this candle's high, closed beneath it. The blue line appeared. That to me was my signal to get in. Here's my strongest resistance, the high of the day, and a sweep. So I said, okay, let me go ahead and get in. This is on a pound yen. And remember what I said about that was the result. Well, remember what I said about equal lows being profit targets? Because if we're right and the bias is short for the day, we look for these equal lows to be taken out by price eventually. And it did do that. All right, so this did not take long at all. You were out of this trade in about, 5, 10, 15, 20, 25, 30 minutes. Okay, done. Just a straight drop. Boom. All these equal lows, gone. Right, will every trade move this fast? No. But some of them will. So you need to be prepared for that. So get excited when you see equal lows here and price is in line with your bias and you see a sweep near the high of the day and you got these lows there. Watch out. Okay, because price could be coming for those longs. So everybody who went long here, toast. So we're finding entries. How do you get the best zones for your trading? When you have a bullish candle range theory and you have the high and low of candle 1 isolated, the best odds are to trade below the middle of candle 1. You can still trade above candle. You can still trade above the middle, but the odds are just lower. And when you're bearish, your best odds are trading above the middle of candle 1. This is just a fib. I make my fib the 50% level. I change the color just so I know which way I'm going. And highest odds are above it, lower odds beneath it. Close to. But if you're like way down here somewhere, you can still win possibly, but So here's a CRT daily example. Candle 1, candle 2. Here's a trading candle, candle 3. Here's our entries where we have equal highs right here. You could have taken a trade anywhere in there, but notice it's above the middle Equal highs here above the middle. We like that. And a sweep here. A sweep and an equal high can be very good to see. These are all 20 pip stop loss, 20 pip take profit. So that's trade one, trade two, trade three. Awesome. And then you have one more right here underneath it. This still did work out. But after that, you just get consolidation. You're starting to see equal lows and all that. And that's just not worth trading down there. Okay. Even with these equal high right here, nah. So, it didn't give you much. Okay, but you had three to the upside, right? But that's all you're looking for right here. Sweeps and equal highs when you're short. Above the middle of candle one. Here's a long example. You have candle one, candle two, candle three. So we draw a fib from the top to the bottom. Our best trading zone is right here, where we look for equal lows and sweeps to the low. And this one right here gave a little sweep to the low right there. Could have entered over here. I forgot to isolate that one. So that's one. Then you got equal lows right here. This one's exploded up. I don't know if that was news related or not. So this actually gave you two setups below. This is one sweep and then equal lows. Actually had two equal lows here and another one there, the sweep there. Okay, and then so you had like 2, 3 examples below. And then you had 1, 2 up here. So I miscounted that, but you had a few opportunities there and then some there. Later on though, I had to pause this replay here because price did eventually start to come back towards the middle. So right here, again, the best setups down here. If you go up here, I'd recommend using a smaller take profit stop loss, like 15 pips each. 15 pip win, 15 pip loss. Do it like that. Down here, I would do 20-20. So let's see if we can see a couple of live chart examples real quick while we're trading. That's actually the chart I just picked. But let's just go through a couple of charts and see what we can see. Let me exit the replay. There we go. We're on the live chart here. And let's see. The upside. Don't see anything there. That I showed pound earlier. So this could be a candle 2. This could be a candle 2 right here forming. I'm definitely going to mark that for tomorrow. Forgive me, I'm just on the fly, but I'm going to watch that for tomorrow. See if I can get some profit on that. But in any event, let's see. This could be a candle 3. A slow moving one, but one nonetheless. So let's check the behavior of it. We're still above the middle. Let's drop down to the 5 minute. And let's see the price. This is a live chart. Let's see it in action. Let's see what we can see here. So again, we like to place all our trades inside the range. We do got some equal highs right here, though. That's good. So let's see if we could have got something. Maybe a 20-20 up here, possibly. Maybe not. Yeah, okay. So that would have worked out right there in line with the short bias on those equal highs. But here's a little, sometimes they can be hard to see because the lines can be real short. But this right here is a sweep. And it's above the middle of candle 1, this red line. So let's see if that would have paid 20-20. If we'd have got that on the candle close, that would have been a win right there. That's cool. Don't see any more. Price is kind of retracing some a little bit. So the last equal high I see is right here. So everything else, this is just kind of chopped. So I don't see anything else that would be worth taking for the moment. So we'll get rid of that stuff. Let's see if I can find a long example and then we'll wrap this up. Oh, matter of fact, yeah, I know one. Now it is a candle 4, but when it's there, it's there. So this one right here was candle 1, candle 2, candle 3, right? And then sometimes we take a candle 4 continuation. So if I go down to the 5 minute, candle 4 and candle 3, they're pretty much brother and sister. Okay, they pretty much act the same way is my point. So let's see what we can see. And we're just looking for the behavior at this point. I'm going to go back a little bit and see if it gave us a little more. So we got a sweep right here. So you could have entered right here. That was at like 940, I think. On a 20-20, that would have hit. You have equal lows right here that are still holding. And notice how this price retraced here near that equal low. So if you did, say 15-15, you would have got take profit hit on that too. And here's another sweep right here, but there's the high of the day, so I'm not gonna, try to speculate on that one. But again, low of the day, sweeps, equal lows. That's all I'm looking for. Once the low of the day is established, I'm looking for sweeps and equal lows in line with my bias. Okay, so actually, yeah, this entry here, make this bigger, was based on these equal lows right here. That's where that comes from. So you could have entered all the way from like, was this 11 o'clock at night all the way through 2:30 in the morning. That entry was still valid because these equal lows are still holding, is my point. So same thing. But candle 4 and candle 3, they pretty much act the same. You're looking for the same type of price action. So that's it. Okay, so let's wrap this up. The benefits of trading candle 3 this way, it's going to give you more precision entries, okay, with tighter risk. So smaller stop losses, okay. Cleaner invalidation levels on those equal highs, equal lows, or sweeps. And you're not guessing direction. You're entering when the move actually starts. You have a repeatable intraday setup that does give easy scalability. You have multiple opportunities within a single candle 3, right? Across pairs and sessions. So you can compound this for constant one-to-ones, back to back. I stop at 2. If I can get 2 back to backs, I'm good on that because I compound my profits in one day. But that's another way to approach the market as well. For instance, let me see. I'll show one more, then we'll be done. I'm just going to try to find a pair that moved a lot. Okay, here we go. Pound cat. I don't know if this is oh yeah, this was a candle 4. I hate I missed this one too. I had it marked, but I didn't take it. Yeah, it's candle 3 right there. Okay, so let's go down to the 5-minute. And we just should see a never-ending trail of equal highs and sweeps from the daily open onward. Yeah, this was textbook. I hate I missed this. A little different because of where candle 3 closed, or where candle 2 closed, but first entry right here would have been off of that sweep. That was at 2:10 a.m. Okay, so you could have took a short there. When we talk about the repeatability of it, let's do 2020 right there. Then what's our next sign? We have a sweep right here. That's another 2020. That holds right there. And this was just a really big move here. I don't know of any others that may have panned out, but the move on this one alone, I mean, was just huge. And sometimes you don't have to necessarily set a take profit. I mean, because this one dropped 100 pips. Now, I'm not going to act like these types of moves can be predicted because they cannot. However, I believe in dynamic risk management as well. So if you have a one-to-one and then you want to keep compounding, you can. Or if you just want to leave it open, take profit, just see what happens. There was 100 pips right there for you, trading candle 3. So there you go. That's another option. It was a break. It was a breakout of the range, though. That's the point. So if I get rid of that and this, let me reset this. Every now and then, candle 3 will completely break out of the candle range low. So candle 1, candle 2, and then candle 3 just completely broke out of it. That can happen too. So, there it is, right? Okay. So let's finish this up. So just keep it simple in conclusion, okay? Form your bias, analyze the lower time frame chart, execute near the sweeps or the equal highs or lows. That's all you're doing. As long as the zone holds, you stay in. If the zone closes or gets rated, you were wrong, you need to get out. Okay, but if you don't see a sweep and if you don't see equal high if you're short or equal low if you're long, you are not trading. Okay, so you have to wait and be patient for that. And then try to keep the trades in those same zones as well when I talked about it being right here. Okay, for when you're bullish, you got to isolate your candle 1, keep most of your trades down here or most of your trades up here. Okay, be long or short. This is where you're looking for your ideal price action, up here or as close to this line as possible before it just completely drops off the map. And then same thing up here. Okay, keep most trades down here or near the line because you're expecting price to just pretty much take off, hopefully. All right, so I appreciate your time and attention. Thank you so much for watching and have a great rest of your day. Take care.